Good morning, everybody. Mike Tedeschi, investment strategist over at Perspective Wealth Planning. With this week's video, we're going to be taking a look at the four major U.S. indexes. We're also going to be taking a look at the emerging markets, and we're going to be taking a look at the Hang Seng as well as the Nikkei. We want to take a look in at how some of those Asian markets are doing with the news this week. I'll jump into the news here in just a second about the trade wars, but first let's talk technically about the major four U.S. indexes. Well, what we've been discussing here over the last few weeks is the worst thing for the bulls is really to see a potential double top forming there in the S&P 500, meaning going back to where we broke down in October, we basically would rally up right to that same level and go no further, essentially fail and start to turn down. And that is subsequently what has happened this week, and that has happened, of course, on the back of Trump saying that he's going to increase the tariffs against China. So it's been a volatile downward pressure week. The other thing that I mentioned that would also be very negative for the bulls is what the NASDAQ did, and that would be actually break out to new highs, but not be able to hold on to them and immediately fall back underneath that major resistance level, acting as a false breakout. And that subsequently is what has happened here in the NASDAQ this week with this downward pressure as well. It's back under that important breakout level going back to last October. Now, when we take a look at the moving averages themselves on the NASDAQ and the S&P 500, we are now below the 10 and the 20-day moving average. We're still above the 50 and the 200-day moving average. So if we come back in here and we take a look at the S&P, right, we're below the 10 and the 20, and we're above the 50 and the 200-day moving average. Now, when we're like that, our moving averages are not all aligned, and that just means we need to be more cautious, right? When everything is lined up together, we get smooth sailing, and when we start to have different moving averages telling us different things, some were above, some were below, right? They get mixed up, and that presents a more difficult environment for directional trend trading. So we'll need to continue to pay attention to this. Now, when we take a look at the other two U.S. indexes, the Dow is actually under the 50-day moving average as well. It never made a new high, so it failed directly below it. That is not a good technical signal. And it actually did not hold above what I viewed as the important breakout level from taking out November's highs on that original bounce from the sell-off from last year. Right, that puts its next level of support really at that 25,200 level, which is just below that 200-day moving average, or the pullback that we got earlier this year in March. Now, when we're looking at the Russell 2000, right, this has been the weakest index since last year when we started to sell off. Right, it barely even took out the move from October here, which is what we were watching, is at a very important level, essentially that 1600 on the Russell. But it has put in what is clear to me at the moment is a false breakout there. We have that pop over that 1600 level, can't hold on to it for more than a day, and then an immediate turn down and a reversal underneath. It is below at this moment in time the 10 and the 20. It is above the 50 and the 200. It's also the only index that still has a 200-day moving average pointed downward, so still continues to be weak. If this level right here does not hold, the next level of support is back down here at about that 1500 level. And the main levels of support there on the S&P 500 are going to be that triple top essentially from back in October, November, and December. That level is about 2820, and on the NASDAQ, its next level of support really is that gap from back at the end of March, which also corresponds to where the selling picked up and accelerated back last October, and that is about that 7370 level. So those are the major U.S. indexes here. Let's take a look now at the emerging markets. Now, I'm going to back this up and look at this on a weekly chart. We have not touched this chart in terms of this major support level, this major resistance level, and you can see the drawings from the last few times that we've talked about it, right? And you can see where we pulled right up to, and that happened to be right there at that 1100 zone. That's that resistance zone that we had drawn in here for quite some time, and we have failed directly right there at it. So on a weekly basis, we're under the 10-week moving average. 50 weeks still pointed down, 200 weeks pointing up, the 20 weeks pointing up. This overall is just kind of a messy chart, essentially range-bound stock. We tested the bottom of this range, that breakout going all the way back to the beginning of 2 years ago in February. came back, tested that level, held it nicely, and then all we did was we bounced up into where we broke down in the middle of last year. All right, we zoom in here on a daily basis. The 10 is now under the 20. We're below the 50. We're above the 200. But these are really starting to point down pretty hard. If we continue to see selling here over the next few sessions, we're going to get that cross of the 10 and the 50. So the emerging markets clearly were really weak last year. I mean, they broke down a lot earlier than the U.S. indexes. Made a nice little bounce here at the beginning of this year, but essentially just like the S&P at the moment, all it did was make that kind of V move right back up into resistance, essentially that double top action, and then turn back down. So what happens here is really, really important. When we come in and we take a look, that next level of support really is that 200-day moving average. And it's not because it's the 200-day moving average. It's also this major support level that we were talking about from this breakout here that ultimately ended up failing, and then the ultimate breakout as well as the breakdown back in here. And that's that 10-20 level on the emerging market ETF. Now let's take a look at some of the Asian markets. Let's take a look at the Nikkei. On a weekly basis, we're going to come in and we're going to take a look, right? This major level of resistance right here from last year, we got this pop out and break out to new highs. And this is a good example, guys, of a potential of what a false breakout looks like and the potential that the NASDAQ currently has at the moment, right? Marginal new highs, holds for a day or so and then turns around and reverses. And when you see how quickly this turns around and reverses, what is often said as a false breakout is led in the opposite direction very swiftly. It's a swift, sharp move in the opposite direction, and that's certainly what happened here on the Nikkei last year. It set up in a little bear flag and then ultimately made a further breakdown with the rest of the global indexes there into the end of last year, and it subsequently has had a very nice bounce this year. But unlike the Dow, the S&P, and the NASDAQ, which got very close to or made new all-time highs here this year before we started to see this turn down, this didn't take out the important level from back in November for them. Ran right up into that resistance in this week, painting a very ugly weekly candle just straight down. And of course, we can come in here and we can take a look at this on a daily chart, right? Very clear, just breaking below. And it is below, and there's the reason why I wanted to zoom in on the daily charts, below the 10, the 20, the 50, and the 200-day moving average. So underneath all four of those. So that is a bit of a concern here on this this market. Its next zone of support would come back in here. Right here at this level, basically the lows from March where it held twice, the original bounce spot from back in October, and that's really about 2,850 there on the Nikkei. Now, lastly, we'll take a look at the Hang Seng. So let's pull this up. And a very similar look to where it ultimately has failed here. And it's that very important resistance level from last year. Now, the Nikkei chart looks very different in terms of it made a new high in the middle of last year. This did not. But, again, very clear shelf of resistance that is in play on this index that we rallied right up into. And this week gapped out and continues, of course, that selling. Look at this on a daily basis. It's still above the 200, but it is below the 10, the 20, and the 50. Again, any more downside, you're going to have that 10 cross underneath that 50, and that's not good. And really, its major zone of support is right here at this 28,000 level. This is how I kind of see this. So it's right in here, and the next support after that, if it were to continue its downside momentum here, would be about that 27. 150 zone there. So all in all, this is what we have been talking about as a potential possibility here over the last couple of weeks and what we were really watching for, right? Yes, this is news driven to the point where, Trump came out with the tariffs and that's what caused the gap down Sunday night, and subsequently that has been all the headline risk this week, and we continue to see selling off of that news. But from a technical perspective, if we're not paying attention to any of the news whatsoever, I mean, the market's rallied right into resistance, and that is where they failed. Yes, news ultimately was the catalyst. Usually there is some sort of a catalyst to get price to turn around. But technically, that is not really a surprise where and which this happened from. So Again, the bears have not claimed victory here whatsoever. There's a lot of clear support levels underneath of where we're currently at. But if selling continues to pick up, we are going to have markets that are down underneath all of their major moving averages. And of course, that we're under the 200-day moving average. That is where the bad things really can happen, i.e., large pushes to the downside. So we need to be vigilant. We need to pay attention. As always, I'll be here once a week to kind of guide you guys through the different technical levels and talk about where we may be headed. I hope you guys have yourself a fantastic week. Comment, share, like the video, and look forward to seeing you guys next.